Hello, homeowners and home buyers. This is Mia, Effortless Mortgage. How are you guys doing? So we have colder months ahead of us in Canada, so this is a perfect time to talk about how to stay warm financially and how about your overall financial well-being. So today we're exploring how a HELOC, spelled as HELOC, can be your financial ally, especially if you want to access the home equity that's you've been building up for years in your home without trying to sell your home. With higher mortgage rates and slower market, it is time to think strategically and use those financial tools and products like HELOC to help you better your financial position. Think of a HELOC as a credit card secured by your home. You can borrow it, pay it back, and borrow again whenever you like. And because it's secured by your home, it's tied to your home equity, it is typically a lot cheaper than credit card or car loan or any unsecured personal products. It's very comparable to the variable mortgage rate. There's one disclaimer about HELOC and one thing to keep in mind before we talk about the benefits. Because it's a variable rate product, the HELOC rates, the home equity line of credit rates, goes up or down based on the prime rate. Mortgage prime prime rate is tied to the Bank of Canada overnight rate. So when the Bank of Canada increase their rates, the HELOC rates will go up accordingly. When they start decrease their rates, the HELOC products will decrease accordingly as well. So that's what we call floating rate products or a variable rate products. There are some really compelling reasons in getting a HELOC product. It's not just a financial tool. Sometimes it can be a lifeline. Here are a few common uses for HELOCs. Number one is to consolidate high interest debt. So as mentioned, the HELOC rates are very comparable to mortgages. So if you have large balances on car loans, unsecured personal loans, credit cards, it's a great way to consolidate those higher interest debts into a HELOC and lower your overall monthly payment and save a lot on monthly cash flow. And number two is to fund some essential purchases and repairs or renovations in your home. Home ownership is expensive. If furnace breaks down, your AC breaks down, if you need to add a drywall, fix a roof, a lot of those expenses can come unexpected. It could also be that you're looking to renovate your home, adding a basement so you can rent it out, or you're thinking about instead of upgrade into a bigger home, you rather stay and renovate and make your current home better. Those are large ticket expenses. When they are not aware that they can get a HELOC, they end up running up their credit card for tens of thousands of dollars to do those renovations. So HELOC is a much better choice to be used to complete large repairs, renovations on your home. Number three, you can use your HELOC to purchase another investment property. A lot of people pull out HELOC funds from their HELOC as down payment to purchase another rental property. And keep in mind, any interest costs that's related to purchasing or maintaining a rental property can be written off for tax purposes. So that is really a win-win. Rental income is taxed at a higher rate because it's passive income. So this is really a cherry on top for using HELOC as a down payment to purchase another investment property. You can use HELOC as emergency reserve for anything. Essential to have liquidity and have that flexibility to ensure you have peace of mind about your overall finances. We see more and more lenders offering HELOC products across A, B, and private space. And oftentimes if you're buying a home, you could have a hybrid product that has mortgage and HELOC attached to it. There are some qualification rules applicable, of course. So a lot of people are looking to kind of refinance their current home to access their home equity. This is where HELOC really shines versus a traditional mortgage.